Well, good morning. Who we got watching so far? Let me know in the live chat. Thanks for tuning in. Oh, good morning. It's 8:27. We'll get going here in about 3 minutes. Let me know if you can hear me okay and where you're watching from. I am broadcasting live from Bali, Indonesia. Good morning, good morning. I see we got another viewer. Let me know where you're watching from and if my volume is okay. Good morning, good morning. 8:28. 8:28 p.m. Bali time, 8:28. Jeez, Chester, holy smokes. I didn't know you were tuning in so early. I appreciate that, man. Good to see you again as well. Obviously, I'm doing something right if I'm getting you to sign in so early from Seattle. You normally up this early, Mr. Chester? Maybe you're working night shift somewhere, just gotten home. Because it must be, what, 5:30 a.m. in the Western Hemisphere, Western U.S., I should say. Good morning, good morning. I see we got 3 people. If you're here watching live, I appreciate that. Let me know in the chat room where you guys are from. This is a live event, so I'd love to talk with you guys, get to know you better, and help each other out. We'll get going here in about 1 minute. I'm off screen inviting other people to our live stream, and I appreciate it if you do the same. The more people we get here, the more ideas we get flowing, the more stocks we get to look at, and ultimately, we all benefit. So be sure to share this live show with your friends and family, especially if they're in the stocks, any online communities that you're a part of that are related to stocks. Let them know that we got a great show going on here so that we get more viewers and then we get more ideas and we make more money. That's the whole idea. You guys make money too when we find these great ideas. Chester says he's watching at 5:30 a.m. from Seattle and he's used to starting at 6:30. Yeah, I guess you have to trade at 6:30 if you want to catch that morning bell from Seattle. That's pretty rough. But that's the sacrifices you got to make when you make the big bucks at Microsoft, right, Chester? Oh, or maybe you work at Wizards of the Coast, if they're still based out of Seattle. I wanted to move to Seattle one time, just so that I could try and work around the game development studios, Xbox, and Wizards of the Coast. Back in my days when I was chasing the dream of working at somebody else's studio. Now I've got my own little studio. I think I made the upgrade. But you know what? Sometimes I still wish I had more experience in that industry. More real world, big box, big game studio experience. I worked on a bunch of small titles, nothing you'd ever heard of. I am not the world's best designer for lack of experience. Oh, I just made a mess. Hold on. Let me get a tissue. I gotta clean this up. Hey guys, if you're tuning in, it's 8:31. We'll get going here pretty soon. This is the live Fox with Stocks option trading show. And here are some symbols that you might want to look at because they do meet the criteria of over 4% ROI in a month. In fact, you can see they're here between 5 and 7%. Back right in a second. I just managed to spill tea all over my desk and phone just as I'm about to live streaming. And if this is your first time tuning in and you'd like for me to talk about the wheel, I need you to let me know in that live chat and I'll be happy to explain it to you. Otherwise, I think most of our viewers want to skip the wheel explanation and get straight to the market and finding deals. So if this is your first time, you don't know how to trade the wheel, you've never traded the wheel before in your life, let me know in the live chat and I'll be happy to run you through the streamlined version of it, or you can rewatch some of our replays as we skip forward and go straight to deal finding. But let me know if this is your first time watching, or if you feel like you need a little bit more explanation to understand the wheel and why it's so powerful. There we go. Got my desk cleaned up. Got my tea and water ready. We are about ready to get going. You had an Xbox job. That's awesome, Chester. You were working on hardware or software? And if software, can you tell me what title, or are you still under NDA after all these years, however many years that may be? Oh, one more tissue for the bottom of the cup. There we go. All right, I think we're all set up now. All right, guys, I got 4 people watching, but only Chester's talking to me. Either the rest of you are driving and listening on your phone, or you just don't want to talk to me, or your keyboard's broken. So, I had a very busy day today. I went to the beach very early this morning. We crashed the resort. Brought in dogs when you're not supposed to bring in dogs, but they didn't kick us out. They just told us at the end, and I talked them into letting me come back. I paid $3.50 for an amazing breakfast. I got my, I might not have my light. Oh, there we go. Let's turn that back on. Hey, guys. Whoop. There we go. Now you can see me and hear me. That's a double whammy. Jester was working on Xbox software and he was working on the branding site. Okay. Anyway, thank you guys for tuning in. We got 5 live viewers. Go ahead and hit that like button. And if there's anything you want me to talk about today, please let me know in the live chat. Otherwise, I might skip what you want to hear. I do want to mention that I put on this show to help support the SENS organization. I'm not affiliated with them yet, but I want to live forever. I want to cure aging. That's why I'm doing this show, so that I can gain more viewers, make better trades, make more money, and help support the cure for aging so that we can fix the world, make the world greener, better, and more beautiful, and not have to die until we want to die. Anyway, I use the wheel strategy. I do consider it the most amazing strategy that I found so far. And I'll tell you what, a lot of you guys are getting beaten up in the stock market yesterday. It's not showing me now, but I had a screenshot of yesterday in the red all across the board. Let me find that screenshot for you guys. See if I can share it here. There we go. Does your portfolio look a bit like this, guys? Red, 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 and green, green. Hold on. Let me check my puppy because she is lighting up a storm. What's going on? Huh? Come on in. Oh, no idea what she's barking at, but she's going crazy. Anyway, sorry about that. Anyway, if you're getting beaten up in the stock market yesterday, you're seeing a sea of red and a little bit of green on the white tips, like tips on a wave. You might be struggling and you might be stressing, but I'll tell you what, with the wheel strategy, I do not feel any stress yet. Because, very important, a little word, which slide is it on? Y wheel, downside protection, slide number 10. Downside protection, that's the story of today. While most of these stocks are dropping, right? AI dropped 1%, ARKG dropped, what is that, 0.5%, a little bit more than that. GRWG dropped 0.5%. All these stocks are dropping. Sage dropped 10%, that's a big hit on Sage. That one might concern me a little bit later. But I'll tell you what, not too worried, because every trade I make has 10 to 25% downside protection. So until that stock drops, again, usually I do about 15 really. I'll go ahead and edit my slide there. I mean, I'll do a 10%er, but most of my trades are doing 15 to 20% downside protection. So until the stock drops 15 or 20%, I do not lose any money. How much money do I lose? I lose 0 money. Okay, now I don't want it to drop 15, 20%. Okay, I'm not hoping for it to drop 20, 20%. I obviously like number to go up, right? I mean, number go up makes brain happy, but I'm not stressing, because the worst case scenario with the wheel strategy, if you do it properly, if you do it the way, if you do it the way that I do it, that's the real way to say it, then you're going to get 15 to 20% discount when you do get those shares. And if you're getting a 15 to 20% discount to yesterday's price, you can actually make more than your monthly return. I've done it several times. I've done it on Clean Spark. I get it a 3-bagger. That's 300% in 3 months. Using that downside protection saved me. I got in at $9, sold at $27. But there's also plenty of times I've gotten hit with that downside protection, ended up owning the shares, was going to make 5% in a month, and instead make 20, 15, 30% in 1 month, month and a half, okay? That's the beautiful thing about downside protection using the wheel strategy. By the way, we got 6 viewers now. Hit that like and subscribe button, but also join the live chat. Tell me where you're calling from, and if you have done the wheel before, or if you want me to explain it, because otherwise we're going to start looking for some deals. We got plenty of stocks crashing yesterday, so I'm going to start jumping into the scanner and see what we find, but I need to know if you have done the wheel before or if you want me to explain it. Okay, I'm going to open up my scanning parameters here to see if we can get a little bit more. I'm going to turn that one off. There we go. Let's see what we can Let's see what we can see. Thank you, whoever hit the extra like button. That's one more person out of 6 to hit that like button. Time is 8:39 a.m. Eastern Standard Time, 8:39 p.m. Bali time. You're watching the live Stocks with Fox show. We're going to be doing some wheel trades today, or at least looking for them. Yesterday you got beat up in the stock market. Now would actually be a better time than Monday. I feel bad because Monday we opened up some new positions, and today would be an even better day to open those same positions. But now we got a little bit less buying power. But that's just the way it goes sometimes. So we got GoPro, you can make 4% in 23 days. TNA, I forget what they are. It's small cap 3X, I don't care about that. Overstock, I don't like them. I think they're overpriced. Well, they might be overpriced, but they're definitely on the high end from where they were a year ago. So I don't like that. Blink charging, I don't do that. Workhorse is okay. Plug is okay. Fuel cell is okay, but I own so much Tesla, I don't like to do that. Same with solar, I don't like to do Sol. Triple D, that shows up again. We can get 5% in 23 days. By selling the 1750 put, you'd be $2 below the money. Your cost basis, this is your discount, your downside protection, also known as break-even percentage if you're using bar charts, okay? Your cost basis distance would be 15%. So if you do end up owning the shares, you own it 15% less than what it's trading today. And that's taking into account your cost basis, not just your strike, right? Because you don't look at the strike. You got to figure out your cost basis to figure out your downside protection. If you don't understand that, let me know in the live chat, and I'll give you some examples and walk you through it, because that's going to be one of the most important things I could possibly teach you about the wheel strategy and about trading in general, and why the wheel strategy is better than buying stocks. Okay, it's better than buying stocks. It's safer. It makes a good monthly return. I recommend it to all my friends and family, but you know, most of them don't listen. I don't know if we've looked at this one yet before. Okay, this is a new company to look at. AAOI. Never looked at that one. We'll check that one out today. I haven't, I think, do I still have apps? I might have closed apps early for a profit. No, apps is off the books. And apps is showing up again in our scanner, so we might want to trade some apps. Trading currently at $69.43. You can sell the $60 put for $3.50. That's close to a 6% return. Getting an 18% discount if you own the shares, if you end up buying the shares. 70% pop. That looks pretty good, guys. We're going to add that to the report. Tilray, we've got an active position on Tilray, I believe. No. Where's our Tilray? What happened to our Tilray? Or maybe that's in a different account. Filled, expiring, put. Okay. Am I just not seeing it? No. What happened to Tilray? That expired April 30th. Okay, good. So we can do Tilray again. 30 days out, June 4th, you can get 6%, $14.50 on the put, give you a cost basis of $13.60. Let's go ahead and take a look at that one. Kodak, that's a death by 1,000 cuts. I'm not interested in doing Kodak. We got 9 viewers now, almost at the double digits, boys. Be sure to, if you like this show, you want to see it grow, make sure you share it with your friends. The show's either growing or dying. Sun Power Corp, okay, don't want to touch anything related to that. Aurora Cannabis, I believe they're out of Canada. 4% in 23 days. Not getting too much cost basis. It's still 17%. It just looks small because it's single digits. We'll look at Aurora. All right, FOSL, Fossil Group, watches and branding. And Afria, also known as Tilray. I'm not sure there's much reason to do puts on both of them. You can get 4% on Afria. You can get 6% on Tilray. Seems like 6% is better than 4%. 30 days, 23 days. Okay, it's not apples to apples. Pretty close APR. Oh no, it wasn't. Anyway, let's open up those, take a look at those. Hey, 8:45 in the morning. We got 11 viewers. We only got 4 likes. That's a difference of 7. Let's even that out, guys. Hit those like buttons. Tell your friends. And also, in the chat room, let me know where you're from. And if there's any stocks you want me to look at. If you don't understand the wheel strategy, let me know. And I will be happy to teach it to you. But otherwise, we're just going to look at stocks. That's taking forever. Anyway. No higher positions on Afria, so be better off trading on Tilray. You can get 6, almost 7, 4, 5, 5.5, and still get good pop and cost basis distance. You can get 5% with a pop of 72, cost basis of 17.5. Or you can get 6.9%, and that's in 37 days. Cost basis is 13.5. This is the one that you'd want to do. I'd want to do. I shouldn't tell you what you want to do. This is the one that I would want to do if I'm going to do it. Okay. What else we got going? Okay, Aurora Cannabis. We're going to look at that in a second. Applied Optoelectronics Inc. 2,600 employees out of Houston, Texas. Okay, they're in fiber optic networking products. Okay. Applied Optoelectronics design, manufactures, and sells various fiber optic networking products worldwide. It offers optical modules, lasers, subassemblies, transmitters, and transceivers, and turnkey equipment, etc., etc. They sell to internet data center operators, cable television, telecom equipment manufacturers. This is a good sector. It's tech, but it's tech hardware in a good sector. Fiber optics is still way behind in the US. Let's take a look at their financials. Good morning, Wayne. We got Chester on the call with us. We got 11 viewers, only 5 likes. We still need at least 2 more likes. Come on, guys. All right. Fiber optic optoelectronic company is still in the quote-unquote growth phase. They are still losing money quarter over quarter as they grow their business. They are used to losing $60 million a year, which is very unfortunate because if we come and look at their cash on hand, they only have $50 million in cash, which means they're going to go through another fundraising round, whether it be debt or shares. I'm losing my words here. Anyway. If we look at the debt to cash, they've only got 42% on the books. They could borrow another 30%. If we think about that, they could borrow another $144 million, continue growing for 2.5 more years before they would be forced to issue new shares and dilute. That was the word I was looking for, dilution. I wanted to say liquidation, but it's dilution. Revenue growth is 7.5% quarter over quarter, 22% year over year. Profit margin is bad. Institutional ownership is below 50%. That's not good or bad, that's just average. Insider ownership is a little low. CFO sold 50,000. Okay, these are just tax numbers. President and CEO sold 200,000 in January at the $12 mark. Okay, that's actually good. So here we can see that when it was trading between $11 and $12 a share, insiders were selling. Now it's at $7.26 a share. Not a very happy chart pattern. That is not a happy chart pattern. I mean, we've got a bit of sideways action. All right, we're gonna. Anyway, let me know what you guys think about this chart action. But I do like that when they were selling, it was $11 a piece. Now it's at $7 a piece. But why have they not started buying? And why are they still trending down on such a good industry to be in? All right, when do earnings come out? Earnings come out May 6th, so earnings come out tomorrow. So we are going to add this to our watch list. Let me open up my calendar here. You guys don't get to see that, unfortunately for you guys. But we want to come back on Friday and check out, we've got a bunch of companies to check out on Friday. You guys remind me to check my watch list on Friday. And we are going to check out AAOI after the earnings come out. All right, I've got that set up and ready to rock and roll. But I do like the sector that they're in. I do like I'm not a big fan of their debt, but anyway, it's on the watch list. Earnings are coming out. Aurora Cannabis, Pharmaceuticals, 2,700 employees. Believe they're out of Canada. Yep, there we go. Edmonton, Canada. Believe they're the largest producer of cannabis in Canada. Blah, 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 blah. Includes Aurora Drist, San Rafael 71, Daily Special Altavia, blah, 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 blah. Anyway, let's go check out Aurora. Market cap 1.7 billion. Big spike up in February, the 1750, all the way back down to 867. Previous low was 780. Before that, they were at 780 before the run up to February. Earnings come out May 13th. That's unfortunate. That's a little early. There's a big drop in October, November, down to $4 a share. Anyway, revenue quarter over quarter is 20%. Insider ownership, institutional ownership is super low. Insider ownership is super low. That is ugly. Why is that? They are a profitable company. They're making $300 million a quarter. They've been profitable since 2018. Total assets $2.8 billion. Total liabilities $600 million. So they've got about a 26-ish% debt ratio. Sorry, did that wrong. 22.3. 22.3% debt ratio. I mean, everything's solid on the financials. The only thing that's tripping me out here is this low institutional and low insider ownership. I like to see high insider ownership because then the staff, the management is really on the investor side, right? They really want to make the company go crazy. Rashid says, I'm still holding AMC. Yet the cinema company, the meme stock, I thought the stock would jump with lockdown easing. Price is still going down. How would you trade this on the wheel? I would dump it. I would dump anything that's a meme stock that's been on Reddit. It's the main stock on Reddit. Those are hot potatoes. You asked the question, so let's go ahead and actually take a look at the financials on AMC. But you got to understand, when you're dealing meme stocks, when you're watching FinTalk, TikTok, bimbos, and himbos talking about companies that they're trying to pump or short squeeze or whatever, you're really playing a game of hot potato. And hot potato, if you don't know, you don't want to be the last one holding. It's like playing with hand grenades. Yeah, it's fun to throw around, but you don't want to be the last one holding it or anywhere near the circle when that thing goes off. You don't want any part of it. Here we can see the short ratio is 1 to 1. Is that 117? That's the average daily volume. Okay, that's what I'm looking for. Percentage short of float. This only has 20% shorted. Okay, that's good, Rashid. He's saying he's doing it for the fundamentals, not because it's a fun potato hot game on Reddit. But still, when I see stuff on Reddit, I'm not looking to really get involved with that unless I agree with the thesis. You know, when, I don't want to... Anyway, when the guy found out that GME was shorted 130%, that was a very safe play and a good play to get in if you got in early enough. All right. So this is only shorted 21%. Anybody that's on Reddit or TikTok, any himbos and bimbos, talking about how this is shorted and they're going to short squeeze the big bad hedge funds, they're full of crap. They're full of crap. They're full of crap. Total liabilities is 13 billion. Total assets is 10 billion. That means you're 3 billion negative. You're 30% billions of dollars in negative assets. So why would you get involved with this? Revenue quarter over quarter is 88%. I would dump this stock. I mean, I looked at the fundamentals for you. I would dump this piece of trash, and I would go take that money and I would short put something else. All right, we've got 10 viewers here. It's 8:55 in AM Eastern Standard Time. Let me know if there's any stocks you guys want me to look at. Let me know if you came here to learn about the wheel and now I'm just talking about stocks. I need to know in the chat room because most of my chatters are people who've been here before. They are fully aware of the wheel and they do not need me to explain it to them. But I will happily explain it to you if you engage with me. Anyway, so AMC is a pile of doo-doo. I personally would dump that and run away, light it on fire, shoot it with a grenade launcher, and then go trade something useful. So Aurora Cannabis, everything looks fine. I was looking for any dividends. Do they pay dividends? No, they do not pay dividends. That's the question now that you got to ask yourself. Do you want Aurora? Do you want Tilray? Do you want both? If you're going to be in the cannabis sector. All right, so ACB, it's interesting. AAOI, we put that on the back burner. ACB earnings come out May 13th. Probably put that on the back burner. I think Tilray also probably comes out pretty soon. 10th of May, yep. Gotta put that on the back burner. Change that to considering. Oh, let's go take a look at Triple D then. Hey, we gained 3 more viewers. Welcome to the Fox with Stocks show. We are looking for stocks to wheel. If this is your first time tuning in, you don't understand the wheel strategy, let me know in the live chat. I do interact with all of my viewers. Happy to teach you guys what I know about the wheel. I've been using it for a year. I've grown an account from 25,000 to 40,000. Bit of a red day yesterday. But you know what? Not feeling any pressure, any stress, because every trade I do has 15 to 25% downside protection. All right, Triple D is on a May 10th earnings date. I've looked at this company a bit before. I'm interested in the sector. I don't know if this is the right company to do it on. Debt ratio is still below 50%, probably 40%. Let's check this out. 302 divided by 733, 41. How good am I? 41% debt ratio. We just want to check this out after May 10th, so we're not wheeling through the earnings unless we really want to. Let me check my calendar, make sure that's on there. For the 11th. Yeah, I got Triple D on the 10th. Should move it to the 11th. I don't know how to move that. All right, May 11th, we will come back and look at Triple D. You guys remind me. All right, Wayne Bicknell says, what I have done is buy a stock. 10 to 15 days, I think it means DTE, days to expiration of a good, ex-dividend date. Sell in the money calls expiring not more than 40 days to So then he sells the covered calls, expiring not more than 40 days expiration, expecting the shares to get called away. Did this on MPLX and IBM. Yep, we call that the triple income strategy. All right, 8:58. We've looked at a few stocks. Since Wayne brought it up, I wanted to make this slide anyway. I might as well make it with you live. Let's put it in after this one. I want to get triple columns, but I don't think triple columns is set up here. Okay, bear with me. We're going to talk about 3 different types of wheels that everyone should know about and should be using the right one for their goals. I haven't talked about goals enough actually on this channel. Anyway, 3 types of wheels. All right, you have the single wheel, you have the double wheel. Oops, if I can type. And you have the triple income strategy. So the single wheel is, ow, puppy. Start only by selling CSPs. When assigned, sell CCs and consider turning into a double wheel. Okay, what is a double wheel? Double wheel is you're looking to simultaneously sell a CSP and buy 100 more shares and sell the covered call. Boop, ba-doop, 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 doop. Okay, and then the triple income strategy, and let me know how you do the triple income, Wayne. Triple income strategy is you find a stock with dividends soon, sell the CSP before ex-dividend date, take possession of shares, and then sell covered call beyond the dividend date. Dividend date. Okay. So, Wayne, when you're doing the triple income, do you start with the CSP or do you just buy the shares and then sell the CC? Rick Phillips asks, what is your average DTE when you start a position? So, great question. Thank you for asking, and this is good for anybody that's listening because there's a very split, I guess, community, or you can say split perspective on this. A lot of people like to do weeklies. They like to sell only 14 days to expiration. I am on the complete opposite side. There's 2 camps to this. I like to be 30, 45, and 60 days to expiration, and I will tell you why. If you're doing a 7-day and 14-day weekly DTE, yes, you will generate more profit. You will generate more ROI if you repeatedly do that, assuming 2 things. Number 1, that you don't get assigned, of course, and number 2, assuming that the IV stays the same. Assuming that the IV stays the same or goes higher. This is actually a very big assumption. Let me see if I can show you guys some examples on Tastyworks. We can do it with space. So here you go. If you were to sell the 9-day DTE, you're going to get 138 IV, so that's pretty good, okay? However, if this chart started to trade sideways and become stable, that IV is going to shrink every week, and it's going to go from 130 to 120, 10, down to about 50, 30, right? It's going to reduce itself. If you look here, you go farther out, the IV is still down to about 78%. Okay, so why does this matter? Well, it matters because when you're doing weeklies, you're normally calculating how much money you would make versus monthlies. and then you're multiplying it out and you're getting a higher number. But if you start to reduce the IV starts to stabilize, what happens to your profit? Your profit comes down, your ROI comes down. Okay, so that I don't like. The second thing, and this is the reason that really did it for me and why I no longer do weeklies, is again, I talked about this already today. Slide 10, no, slide 9, number 5, downside protection. When you're doing weeklies, you are not getting enough premium to generate the downside protection that I like to get. If I do a 30, 45, or 60 day, I get a lower strike and I get higher premium, and those combine to make a bigger downside protection. And the way I look at it is this stock could theoretically slide down at any time. So if I'm doing a weekly versus doing a monthly, I kind of have the same risk of it sliding down, but on a monthly, I have more downside protection, which means I'm getting a bigger discount if I own the shares or take possession of the shares. It also means that I'm less likely to get assigned in the first place. So the way I look at it is I'm locking in, this is important, hear me out, I'm locking in that IV premium for a longer period of time, so I don't get IV crush as a seller, okay, because I'm not trying to do it every single week, and I get more downside protection. So I'm getting two really good things that you don't get when you're selling weeklies. Theoretically, if weeklies IV stays high and you don't get assigned, you will make more money on the weeklies. But I want the more downside protection, and I want to lock in those IVs. Hold on one second, I'm going to turn on the light. Boop, 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 boop. There you go, you guys can see me better now, not in the dark. Alright, let me know if that helped you out, Rick. If you have any more questions on why I do weeklies, why I choose the DTEs that I choose, which is, again, 30 to 45 to 60 days out. I normally don't like to go more than 60. Then it starts to become a little bit harder to predict the future. Mara continues to slide south over the last month. They had a big run up to 56. Now they're back down to 33. You can see they're at the bottom of this trading range since February. I'm still big on Bitcoin, so I am considering Mara and Riot again and again and again. I did open up some positions on Monday. Hey, we got 8 viewers now. We lost 4 of them. I guess they don't like making money. And it is 9:06 a.m. We got 24 minutes before the bell. You're watching the live trading with Fox with Stocks. I'm your host, Buddy the Fox. And you are my Foxettes. Anyway, I wanted to come take a look at Doge. Dogecoin at 67 cents a coin. Up a crazy 100% over the week. And I think a lot of people are going to make some money on this, and a lot of people are going to lose some money on this. As people find out what buy the rumor, sell the news is May 8th when Elon Musk goes live on Saturday Night Live. Possibly could pump over the weekend, but then I think it's going to crash. I do not think this is going to continue its upward trajectory at all. Bitcoin's at $55,700. We're down over the last 24 hours. We were up a lot over the last week, but it's come back down. Anyway, I think I'm going to hold off on Mara and Riot for now. Illumina. Did Illumina show up in our... No, that was in my my watch list. I don't think Illumina's going to have enough IV to be worth trading on the wheel. AI has been a bit of a hit for us. Where did we sell the AI? We sold the AI put at 65. We earned $4 in credit, so we are going to take possession of some shares in 16 days unless this comes back up. Not too worried. I like the sector. I like the company. Could be the next Palantir. It'll be a net debit if I close it early. Okay. All right, we got 9:08. We put some stocks on our watch list today. Nothing that I want to open today, although it's so tempting with all the stocks that have fallen lately. We just have all those earnings dates coming up. For those of you who are not familiar, stocks crashed yesterday as Yellen announced that we might have to raise rates in the future to stabilize the market. Could drive a rise in interest rates. So interest rates going up. Simultaneously, India has COVID problems. And you know, the other big thing with, I think Yellen's timing on this was pretty terrible. A lot of people are going to have to pay personal income tax this month. That's in 12 days as it was extended from April. So I think that was a bit of a double whammy for Yellen to come out and say that interest rates might go up in the same month that people are about to pay their personal income tax. Although I think the net effect from personal income tax is people will be getting money back and pumping it into stocks. Could be wrong, could be right. I think Yellen should have waited a month before mentioning that interest rates might have to go up in the future. I really think she should have waited a month. Anyway, nothing we can do about that, boys and girls. I like space, but I have enough positions open on them already. I'm not going to do anything on that. All right, cool. If you would like a copy of this report, make sure you join our Discord trading channel. I'll go ahead and create an invite for you guys, in case you have not joined already. It's a fantastic way to stay involved with me, the community, find out more trades, because more opportunities, more knowledge leads to more profit, and I'm sure that's why you're watching. If you came here to laugh and cry, you might be in the wrong place, as we are about making that money. Anyways, it's 9:11 here. By the way, I had a very full day today. I've gone to the beach twice, taken my dogs to the beach twice. We went early in the morning to a nice resort. Got a nice big breakfast. I'm talking a big American breakfast. We had an omelet, buttered toast, cereal, milk, juice, tea, and bacon for $3.50 with beautiful view of the ocean, a large swimming pool, nice staff, very quiet, not too many people there. That is the effect that you can get when living overseas in a country like Bali versus living in the US. And this is a good find. Not a lot of people go there and know about this place that I go to. But I'm telling you guys, if you want to unlock freedom, travel overseas, make money trading, I am the guy. You are in the right place. Subscribe to our channel. But I am feeling a little bit tired early today, as a friend came back from Finland, finally back to Bali after she's been in Finland for an entire year, experiencing the COVID lockdown, back to a peaceful, open country that is really great to live in. And we hung out, we played some board games, we had some delicious Japanese food, and then we went for a nice long walk on the beach with the dogs, and then I swam in the beach again. That's a lot of swimming today, so I'm feeling a little bit tired. But I wanted to make sure I'm here with you guys. I commit to being here Monday, Wednesday, Friday to teach you guys how to trade the wheel. And there we go. If you want this report, you're going to have to subscribe to the Discord channel. Chester said, please add more announcement links. Yes, I do need to schedule the future live videos and put them in the announcement channel so that you guys can set reminders. And I will be sure to do that later. Oh, Come on. There we go. Although I might have to cancel that. I think there was one thing on the report that I wanted to change to considering. Oh, we were looking at apps. What is the earnings date for apps and the earnings date for apps is a little close, but not too bad. Apps and Tilray. May 10th on Tilray. We do want to change Tilray. If you guys have any stocks you guys want me to look at or look into, now is a good time to bring them up, as I have exhausted my own scanner and will now soon be looking into managing my positions if necessary. Let's see, we did 10, we did 15, we did 50, and we did 60. 15, 50, 60. All right, guys, we've got 8 people watching, 8 likes. That's 100% likes. That's not bad. I hope you guys are hitting subscribe and hitting that bell. We might not open up too many positions today. We might open up apps. But you know what? You don't need to open positions every day when you're doing the wheel. This is not a day trading strategy. Day trading strategies are a scam to teach you to generate commissions for the brokers. It's also a waste of time. You could be using that time someplace else doing something better, unless you're working for a proprietary hedge fund. If you're not working for a hedge fund, you should not be a day trader. Unless that's also your goal. I mean, if your goal is to work for a hedge fund, then, you know, day trading is good to get you there. You also should not be a day trader until you've had proper hedge fund training. Training is what I'm saying. Alrighty then. Mara Riot, Space, Triple D, AAOI, Tilray, and ACB are going on to our watch list. Apps, we could do that one today if we want to. We've got 14 minutes before the bell opens. We can sell to June 11th. We might want to go sooner than that because of earnings. Or you might just want to close it early. You could open this up and then close it early. You're in $3.50 at the money. That's $350 for every contract that you open. You'll make 6% in 37 days. Or you'll end up buying it for 18.5% less than what it's currently trading at today. Those are the two outcomes possible for this wheel trade. By the way, guys, we've got 8 viewers here. I don't know if you're all regulars. If you are new, if you've never made a wheel trade in your life, please let me know in the live chat. I would love to help you. But if you're not going to interact, I'm going to assume that everyone here is master traders and the wheel strategy. All right, so this is now going to our Discord group. Link is available in the live chat. Would consider after earnings. All right, that might not look like much this morning, guys, but we added something to our watch list and we are considering making a trade. That is actually a good, productive day. Again, we're not in the day trading arena. We are not trying to generate commissions for the man. We are trying to be prudent, diligent, successful traders ourselves. The Let's take a look at apps. I'm going to take a look. I want to get before earnings. Earnings would be 23 days instead of 30 days. At the money, we get the 480. We're just doing this to see what we can expect outside the money. We get 7% at the money, so I think we get 5% out of the money. Sorry, 4% is what I meant to say. 7 would be that. If we come down here, 660, 6650 is looking good. It has a very wide spread, but we can see other ones are, anyway. That's still 6%. We can go farther out to get more downside protection. What were we looking at on our report? We were looking at the $60 put for $3.50. We would only get between $1.40. We might get $2.50-ish if we go a week earlier. We get an extra dollar if we go a week out. It's probably worth to do the extra dollar and close early. But let's do the math. 4% versus close to 6%. It's 2 weeks. That's 2 weeks extra, not 1 week extra. And this would close before earnings if we do it on the 23-day mark. Otherwise, on the 30-day mark, we're going to end up 3 days after earnings. And we want to close that early. Let me think about that for a second, boys and girls. What would I want to do in this situation? Fortunately, we're not seeing any good prices out here for a spread, just to lower our buying power. 60, what would I get on that? Mid is 365, you might get $3 in the 30 days. Clear 5% gain in 30 days, but you'd want to close it early. Wayne says, have you looked at APOG? I have not, I don't think. Let me take a look at that. I just got to make this decision. We got 9 minutes before the bell. I got to decide if I want to open up a position on apps. This is going to eat up $2,000 of my buying power. I'm not going to do apps. I'm making the executive decision not to open one up on apps this time, although it did work out successfully for us last time. All right, let's go take a look at APOG. Maybe we might have taken a look at that one previously. Apogee Enterprises, earnings are June 25th. Yeah, I was wondering why it was showing the line above the 44 days. Anyway, currently trading at $34.50. We've got wide $5 strikes. $34.50, so that's 50 cents out of this. You're only making 50 cents really. You're making 40 cents for sure. What can we squeeze out of this? You can probably squeeze $1.04, then subtract 40 cents. You've been making 60 cents, 0.60 on the 35. You're only making 0.1. You're only making 1.7% at the money. Don't know how I would do that one, Wayne. And you're doing that in 44 days. So I don't see any reason. There's no setup on that one. Rashid says, funny enough, I still have not made a wheel trade. Still nursing some wounds on AMC and SPC. SPCE or SPC? Collaborative Investment Series Trust, ETF. No. I think you mean SPCE. Wayne says, not as volatile as it was. Yeah, I don't see the IV there. I don't see a good setup for the wheel. Unless you're triple incoming it and it's got good dividends. Guess I've got some water here. I have 2% dividends. It's going to be 0.5% every quarter. Earnings come out in June. Yeah, I assumed you meant SPCE, Rashid. They have taken a big hit since the Richard Branson betrayal on House Retail Investor. I need some more flavor drinks, guys. Hold on 1 second. We've got 7 minutes before the bell. Let me know if there's any stocks that you guys are considering or want to have reviewed. Alrighty, I am back. We need to get some more energetic music. Unfortunately, if I do anything that's not Creative Commons, YouTube might take down the video. Bum, bum, bum. It's hard to find Creative Commons that's long enough. There we go. Try and get some energy in here. Boop boop. Oh. There we go. Now we got some soul. We got 5 minutes before the bell. Let me know what you guys are looking at so I can get involved. I'm gonna open up my scanner and see if we can find anything else. It is 9:26. We got 4 minutes before the bell. You are watching live Fox with Stocks. The no BS way to trade. Wayne says, take a look at Chewy. Bom, 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 bom. Specialty retail Chewy. We have earnings date coming out 9th of June. We can still do a 30-day play on this one without hitting earnings. They are a growth company since 2018 or sooner, losing $200 million per year. They've cut their losses, only losing $92 million per year, and now they've finally turned the corner and were profitable $20 million in December. Is this the company that deals with a lot of crazy brands? Anyway. Whoa, look at that assets to liabilities, guys. I don't know why you guys shared these ones with me. You have 100% debt to asset ratio. Wayne says pet foods. Okay, specialty retail. I mean, pets got to eat, but you're looking at a company with a lot of debt. What's their stock price at? $77. Insiders are doing nothing but selling. April sale, 501 million. Holdings GP LLC Buddy Chest got the heck out of that. Stacy Bowman, principal accounting officer, sold for $1 million of shares. CFO sold over $1 million of shares. Chief technology officer sold over $1 million of shares, and that's at 81 and 80. I wouldn't touch this with a red hot poker. Right? You're only $3 below where all of these other guys are dumping their stock. You understand what I'm saying? I mean, if you're if you see the CEO and the CFO selling their shares, that is not a good sign. I want to see especially the CFO. You know, CEOs, they'll sometimes put up a good front and buy the shares, but when you see the chief financial officer dumping his shares, that is not good. But let's see how much Mr. Mario owns. Mario has sold over $40 million worth of his shares. He still owns, if this is correct, he still owns 17,000 shares, which is worth $99 million. I'm sorry. No, it's worth 100,000. Is that right? 17,135 times 77. I don't know where they're getting their math. Not sure how accurate this is, but anyway. 9:29. We got 1 minute before the bell. Oscar NYC says, does APOG work for a triple income div May 17th strategy? Alright, we got live, so I'm going to switch over to live, see what's going on with our stocks and positions. Green, green, green across the board. That's what I was expecting. A few of them turned red just now. I'm getting a bit tired. I'm going to go ahead and take a seat. Whoa. All right, AI is back up. We're still below our put, but we're getting closer to our break even. First things I'm going to look at when you're managing positions is I want to look at the things that are in the money and decide if I want to roll them forward, take possession, or close it early. I can roll forward for $1.55 in credit. That seems pretty good. Earnings are in 8 days. That would put me at the other side of earnings. That's why it's so high. But if not, I'm going to take possession of the shares and be at a 1-to-1 ratio on this company. I think I'm going to roll GRWG forward. That's the mid is going to give me $1.55 credit. The net will give me only $77 in credit. So we're going to see if this goes through. It went through. It went through right at the money though. I did not get anything extra out of that. I mean right at the limit order. Try and squeeze that up a bit. All right, we'll see how that plays out. Hillian, I want my 850 call to go in the money and take those shares away from me, so I'm not going to roll that. I don't think. No, not enough meat on the bone to consider rolling it. And my 850 put should expire worthless here in 9 days. So that'll be good. I'll be out of that company. InnoData has calls on it. 16 days left, so I'm not too worried, but it's definitely in the money. Not sure I wanted that to happen. Anyway, Overstock. That's a different play. That's Leaps. Space. With the $26 put, we'll probably just take shares on that and start selling covered calls on Space. That one was, the $26 put, by the way, was before the Richard Branson betrayal. House on Capitol Hill. This 21 put, however, was after the Richard Branson betrayal. I went really far out on that. I went 72 days out on that. Oh, we got plenty of time for that to play out. Anything could happen. Those are my in the monies. Those are the ones that you want to look at first when you're managing your positions using the wheel strategy. Vuzi, I've got $1.55. We're just at the in the money, at the money situation. So I still need that to drop by almost 8% before anything bad happens on that. So that's fine. All right, ARC-G, we're back out of the money again. That's good. I'm not sure if we actually hit the money, but it was starting to drop. Yeah, we touched the money for a bit. All right, let's go ahead and back and let's talk about APOG for a triple income wheel strategy. Thanks for watching, Mr. Oscar. So we got dividends coming out. You want to have your shares before May 6th. You need to have full set. I'm not sure you need full settlement, but you should have full settlement of the shares before May 6th to make this work. You're going to end up with 0.5% as long as you carry it through till the dividend. So let's try and figure out what we do. And Wayne can help you with this one if you're part of the community. Wayne would be able to walk you through it better than I could, possibly. So here's the thing. You're not going to be able to sell the covered short put, the cash secured put on this because the options would have expired May 21st, which is after your dividends. So if you were going to do this, you'd buy 100 shares, and I'd want to reach outside of it. Why do we still have that active? I want to reach outside of it. Let me turn this music down a bit. There we go. All right, so currently trading at 35.96. So you could, in theory, you could buy 100 shares. How do we do that? I just want to do stock. I want to go long 100 stock. 100 shares, then we turn around and we sell. You have to calculate this a little bit differently because this at the money is actually $1 below the money, so you're only getting really, let's call it $1.05 for easy math. You'd only get $1.05 here. So you'd really own the shares for about $33.50. And then you turn around and you'll get, I think it was $2.20 per year. You're going to get 55 cents per quarter. So your break even on this is going to be $32.95. I'm telling you roughly how you can do the math, okay? So your cost basis would basically be $32.95 if you bought the shares, sold the call for 40 days out, collected the dividend, and then let it expire, and then sold your shares. That's how I would calculate a triple income strategy and start to think about it as, again, I'm focused on things like downside protection. So what is my downside protection? What is my break even? My break even here would be about, let's round it up and call it $33 a share. If you wait till 44 days out and are able to just sell the shares at today's trading price, you would basically make about $4 a share. That's one way you can think about it. If you're thinking about it in terms of percentages, you're going to get, like I said, 0.5% on the dividends. Then you're going to get $1 basically for every $36 that you buy in shares. So again, when you're calculating ROI on covered calls, it's different than calculating ROI on puts. When you do it on the put, you take the premium divided by the strike. When you do it on calls, you take the premium divided by the cost of ownership, the cost of your shares. So our cost of shares would be today's trading price. There's a bit of a spread, but let's call it 36. You get $36. And then you'd be getting $2.05. Sorry, I did that backwards. Come on, calculator. $2.05 on the 36. It's 6%, but you're $1 in the money. A little bit tricky to calculate that when you're in the money. Do I subtract $1 here? I think that's built in. Anyway, so you'd be getting about 6% in 44 days. Well, Wayne, let me know if I'm doing that right. How do you calculate your calls with the dividends here when it's in the money? Because we're about $1 in the money. There is no strike for 36. We have to reach down to the 35. You're getting $1 in the money intrinsic value. I don't do a lot of those. Now, I will tell you this, Oscar. If you were bullish, if you're really bullish on this company, instead of doing the 35, you could do the 40. You got a spread between 40 and 85, so you might get about 60 cents, call it. So you'd get 60 cents on $36. You'd get 1.5% there. Then you get 0.5% on the dividends. And then you open yourself up to having $4 worth of appreciation, as your covered call would not get taken away unless it reached the 40. So you get $4 there, plus the 60 cents in premium, plus the 50 cents in dividends. So that would be $5 in 44 days for every $36 that you put at risk. Wayne, I believe, likes to go closer at the money so that his shares actually get called away. All right, let me know if that helped you, Oscar. If you have any more questions, Wayne is a good guy to talk to about the triple income strategy. He does it every day, whereas I am mostly focused on single wheel strategy, as I was talking about before. Let's go back and take a look at that. Single wheels, you start only by selling the CSP. You do not intend to buy shares right away. Then when assigned, you sell the covered call, and then you can decide whether or not to turn it into a double wheel. A double wheel is when you have a CSP and a CC active at the same time. So you're earning premium on both sides, but you're also double dipping. You're double exposing yourself to that stock. It's really good when you're super bullish. I've done this on Space. I've had a covered call active while simultaneously having a cash secured put active. Okay? Not sure which is better overall, but the advantage of this is you have the lowest cost of ownership. Okay? You have the most downside protection. The advantage to the double wheel is you should be getting more premium every month. Okay? The advantage to the triple income strategy is you're getting dividends while holding the stocks. And I think it's not automatic, but usually when you do this, you're more likely to be exposed. How do I want to word this? Good strategy for blue chips, right? If I wanted to use the wheel on blue chip companies, meaning really really valuable, strong companies that don't have a lot of volatility, I'd probably use a triple income strategy on them. I'd look for companies with good dividends, medium IV, and that's how you'd be doing it. If you do the CC, if you do the double wheel correctly, you can gain exposure to appreciation. To do that, you have to sell farther out of the money covered calls, but then you benefit from appreciation. Whereas if you're just doing the single wheel strategy, appreciation lets you close early, but you're not actually getting additional profits. You're just getting profits sooner. Okay? Which is enough for me. You know, my goal is to make 50 to 75% APR a year. Closing early lets me do that. I don't have to double wheel to do it. And so I get lower cost of ownership, I get the most downside protection, and I can close early. Closing early raises APR. Double wheel, you get a little bit of that, but you get mostly the benefit is that you get more appreciation. You get more exposure to appreciation. Anyway, it is 9:43. I got 11 viewers, 8 likes. Go ahead and give me a couple more likes if you just joined. Make sure you like and subscribe. We talk about the wheel. We go out, we look for stuff. We talk about different variations of the wheel today and the pros and cons of those. And we've got 15 minutes before I'm signing off. Best way you can help the channel is subscribe and share it with your friends. We've looked at a couple stocks today. I decided not to open a position on APPS, APPS. Not because it's not worth doing, but simply because I don't want to tie up that much buying power currently. We looked at doing the $60 put at 30 days with the intention to close it before earnings and collecting $2.05 in premium. Sorry, I'd probably squeeze it up to about $2.40 in premium. Oscar NYC asks, what are your thoughts on the poor man's covered call? So the poor man's covered call basically takes the idea of the wheel and turns it into more of a spread play. And I'll tell you, basically, my thoughts on all spread plays is that they are cash in, cash out. There's nothing wrong with that, per se, but it's a different strategy altogether because you're taking the value of the company, you're taking fundamental value of the company, and you're kind of throwing it in the trash. You're kind of saying it doesn't matter because you don't intend to really take possession of the stocks. Now, maybe there's a variation of the poor man's covered call where you do intend to take possession of the stocks, but I think most people doing it are doing it on a spread basis, meaning they're going to do cash in and cash out. The advantages of that, basically like the real advantage of spreads, even if you just do a credit spread on a covered short put, is that you can graduate to more stocks. In other words, stocks with a higher underlying stock price. So, for example, when I do the wheel, I have to pretty much stick to stocks under $100 because my account size just isn't large enough to justify the position size that I'll end up with if the stocks are over $100 a share. You know, you look at what was that? Was Apogee 300 something a share? One of the companies was 300 a share. Wasn't Apogee. Ah, come on, Tastyworks. You do that right in the middle of everything. Anyway, we were looking at a stock today. It was like $300 a share. It's really hard to wheel on that, but if you're doing spreads, then the share price doesn't really matter as much as you can set the spread to cover your downside loss, which lowers your buying power or usage, and so you get access to more stocks. The downside is, the reason, okay, I'll tell you this. The reason why I like the wheel strategy is it gives me long-term access to stocks. Right, when the wheel strategy, right, let's say the market tanks and you have spreads over here, or a guy doing spreads, and you have account over here doing wheel strategy. When the market tanks, spreads just lose money. There's no way to really manage that except to roll it forward, try and fix broken wings, but you're dealing with money in, money out. When you're using the wheel strategy and the market tanks, you just bought shares at a 20% discount if you're using my strategy, if you're using my criteria. This means that I can turn around and sell covered calls, generating premium again. It also means that I can just benefit from the appreciation. If the whole market drops 20%, I expect the market to recover. That means I turn a 5% monthly premium into a possible 20% monthly premium. That's the reason why I like to stick to the wheel as much as possible. I consider the risk very, very different. They're both options, right? But when you're doing spreads, it's mostly cash in, cash out. When you're doing the wheel, it's cash out, stock in, and then stock out, cash in. Does that make sense? Let me know if that makes sense, Oscar. Excuse me. All right, we got 9:48. We got 12 minutes to go. This is the live Fox with Stocks trading channel. We're going to have more content coming out for you guys. We're going to have some explainer videos. We're going to have more videos talking about stocks, options in general, the wheel. We're going to have scripted content for you guys. If there's anything you would like to know that I might not be covering on these live shows or more types of content, let me know in the comments below, and we'll be sure to cover that in future episodes. We're also going to be expanding into TikTok and all these other platforms, and we're going to consider live streaming on Twitch and Facebook because we're not getting as much traffic as I'd like to see on YouTube. I'd like to keep the YouTube channel going and keep live streaming on YouTube, but if you have any preferences for live streaming on Facebook or Twitch or YouTube, do let me know. Appreciate your feedback. Also do want to remind you guys, down in the description below we have referral links, we have tip jars, and if you've been watching the live stream, I've given out a couple invites to the Discord channel so that you can stay with the community all day long. I've also posted a stock picker report in there in stocks that we're going to be considering and stocks that we were looking at that are worth trading today. All right, we got 9:50 a.m. Market's been open for 20 minutes. Looks like we're seeing a mostly green day, which is what I expected after yesterday's red day. I managed GRWG. I think we rolled that forward. I still have one working on a roll forward. Other than that, the rest of our positions look pretty good in terms of the wheel strategy. Not too many that I have to worry about hitting the break even. Again, I use about 20% downside protection. That's what makes us safe and not panic during these market times. You know, yesterday, if you had just been exposed to the market with a pure buy and hold strategy, you would be sweating as you see your your net liquidation value decrease all across the board. That is why I preach and preach and preach downside protection, downside protection. I do not lose money until the stocks start to go below 20%. 20% loss is zero loss for me. Whereas if you're a buy and hold guy, 20% loss is actually 20% loss. It is a kick in the nuts, as they say. Causes people to stress, causes them to manage early, sell early, causes them to panic, causes them to make bad decisions, causes them to be emotional. But when you've got 20% downside protection, sorry, dealing with something off screen here. When you've got 20% downside protection, market drops 1%, 5%, 10%, you don't really care. Why would you worry? You've still got all that extra percentage for the market to drop. So we're reducing our emotion, we're locking in nice monthly premiums, we're creating downside protection. I think the wheel strategy is an amazing strategy, especially for beginners. If you're a beginner trader, if you're figuring things out, I think this is the safest strategy that you can start with as a beginner. Let me know in the comments in the live chat, is there a safer strategy to start with than the wheel for a beginner trader? I don't know if there is. I don't know if there's a better way for someone to learn options. In fact, I don't believe there is. I actively don't believe there's a better way to learn options than to start with the wheel. Because when you learn, if you start by buying calls and buying puts, you're taking super risky positions to try and make lots of money, and you're dealing with low probability. When you're doing the wheel, you're on the opposite end of that. You're selling to the suckers. You're taking the high probability to make medium returns, and you're making, I mean, we call them medium returns in options, but they're really fat, juicy returns for most stock traders. If you're making 50, 60, 20, even 25, right? If you're making 10, 20, 25% annually, you're crushing mutual funds. And if you're making, like me, 50, 60, 70% a year on options, you're killing it in the market. So I think the wheel strategy is the greatest beginner strategy that is available. And I'd love to hear somebody tell me differently, but I don't know if I believe them. And the beautiful thing about selling options is it gives you exposure to what it's going to be like as buying options. You start to see the mistakes that other people are making, right? You understand how to price an option from the seller side, forces you to be more aware of what's going on the buyer side and the risks that they're taking, the days to expiration, the theta risk, all that other stuff, right? GRWG. All right, we got 9:54. We've only got 6 more minutes together, boys and girls. I've tried to impart as much wisdom as I could to you today. Let me know in the comments how much you enjoyed this show. What was your biggest takeaway, your biggest aha moment, your biggest thing that you felt like you learned today? And be sure to share this with your friends and family. I do really believe it is the best strategy for beginners in entering the stock market. And I've been using it for over almost a year. I don't want to say over a year. I've been using it for about a year now. And I still have not found a better strategy for beginners. Generates nice monthly fat premiums, creates good downside protection, and gets you involved in the numbers of options. Oh, you guys have any more picks for us to look at? We got 5 more minutes. I'm going to take a look at tomorrow while we've got 5 minutes on the clock. Earnings come out May 13th. I want to take a look at the Junes as we pass May 13th. I might be looking at selling puts on those. Woo! We got close to $6 at the money for the June puts. That is fat juicy. That is a 17.6% return in 44 days at the money if you wanted to have that much exposure to Mara and Bitcoin. 17% in 44 days is pretty sexy. 365 divided by 44 times 17.6. That's an APR of 146%. Although you are very, very likely to get assigned shares, so you'd have to be very comfortable with that. Be an interesting strategy to try though. Find these bullish companies that you really like and just sell at the money puts. And see how high you can really drive those ROI. Let's take a look at our portfolio. Some of our watch list items. Tesla back up $4.88 today. That's good news for me. Riot is down $1. That's not so great. Space is down 37 cents. Illumina. Why is Illumina slipping down? Illumina's been such a great stock for me until this month, and then it's just been slipping and sliding for the last 2 weeks, I think. AI is going positive 8 cents. Was negative today and this week. Tilray up 44 cents. CELH, we had that on our watch list for doing later. Let's take a look at these. Celsius Holdings. Earnings came out March 10th. Cassava Sciences came out April 20th. I think we can take a look at this one. I think I need to go back and look at this. Pinterest comes out July 28th. Let's take a look at Sava. No, they do have an earnings coming out May 5th according to this, not April 20th. Oh, I hate when we see conflicting information. Alright, let's skip that one. Pins, if we go 30 days out, getting 325 at the 62. Getting 5% at the money, so you're not going to get 5% out of the money. Not getting much downside protection on this one. Could be a good put spread. That song's annoying me. Let's change it. Oh, 9:59. Take a last quick look at CLH, and then I am going to jump off the air. I do appreciate you for being here. Their earnings come out May 13th. All right, boys and girls, starting to wrap this up. We got 9 concurrent viewers, 10 likes. We are net positive on likes. Make sure you hit that subscribe and bell if you want to stay tuned to more episodes here. Do consider checking out our description box. We've got a referral link to Tastyworks if you don't have an account there. I do all my trades there for the wheel. And because I like them, they're the best for rolling forward. They make options easy. Other platforms make options hard. We also got a tip jar. If you follow us and you make money, consider giving back. Appreciate it. And be sure to join our Discord channel. It is 10 o'clock. I am signing out. This is Buddy from Bali, helping you trade the wheel strategy, helping you make money, get rich, so you can live anywhere you want to work. Live anywhere you want to live, work anywhere you want to work, and enjoy freedom all year round. Have a wonderful day, guys. Happy trading.